Welcome to the first part of a four-part series on financial literacy for young people, mainly high school students and young adults. My name's Adam Bailey, and I'm a teacher at Oceanside High School. And I want to talk to you today about bank accounts, taxes, and income. This is kind of the basics about money. Kind of the whole series is going to be going and talking about money and credit scores, credit cards, loans, and investing, stocks, bonds, mutual funds, that kind of stuff. So I wanted to start you guys off talking about bank accounts, taxes, and income. Just a disclaimer: this is not a full list of everything. This is kind of a basics list of things that I think are important for specifically young people, and is not a complete list in any way. Let's get started. First off, let's talk about types of bank accounts. Well, the first major type of bank account is a checking account. This is kind of the bank account that you use for almost all the things. This is where you store most of your money, especially if you are a young person. Okay. What's nice about a checking account is that there's no limits of withdrawals and deposits. You can use it whenever you want to. This is where you put your paychecks. This is where you put in money that you plan on spending within the next month. And What's the one drawback is that there's a possible monthly or yearly fee or a maintenance fee. Okay. Now, the way you can get that fee waived is if you get direct deposit. Now, direct deposit comes from your employer, and it's when your employer puts money directly into your account instead of giving you a paper check every pay period. So you might get paid every 2 weeks, every month, whatever it is, and the money will go directly into your account. And if you do that and set it up with your bank, there'll be no fees. Okay. And that's usually how it is for one of the big banks that you need to have that direct deposit. For banks like San Diego County Credit Union, which you can apply for a checking account if you live in San Diego, there are no maintenance fees. So that's a great way to start a bank account if you don't have a job. Okay. What's nice about this kind of bank account, you can use an ATM to take out cash with a debit card, or you can use a debit card to make purchases directly in person or online with that account. Next is a savings account. Now, the whole point of a savings account is they pay you to leave your money there. It's not much, but they do pay you. Um, a really good rate is about 0.5%. You can make a good amount of money that way if you go through and actually get 0.5% interest on your money. But for example, mine, I have savings account with Bank of America, and I only get 0.01%. So nothing that special. And that's limited amount of withdrawals each month. You only get about 8 or so. Um, so you're thinking to yourself, why would they pay you for you to give them money? Well, there's an expectation that you're not going to spend this money. It's going to stay there. You can't really withdraw it that easily. The idea is that they're going to use this money to loan to others. Okay, they're paying you to use this money. You usually don't have access to it with a debit card, but you can if you want to, and you wouldn't use this for purchases. So if you're not going to use money for like a month, this is a great place to store it because you can make some money there, here and there. And if you like, look at the attached slideshow, and you can actually figure out how much money you can make with this way using some calculations and things like that. Well, how do you make money in the first place? Well, a job. Um, Here's some three different types of employment, okay, that I would think about versus an employee. Hold on one second. So, how do you make money in the first place? Well, you have to have a job. The three different ways that you can get money through employment, and that first one would be an employee. Okay, this is one you find most common. And what's nice about this one is that your employer will pay part of your taxes. We'll talk more about taxes later on in this presentation. And what's nice is that money is taken out of your paycheck each month automatically to pay for taxes. So usually, at the end of the year, when you have to pay your taxes, there's money there for you if you have to pay that taxes. And if you only make a small amount of money, you get most of that money back. So it's pretty cool. Another type of employment would be an independent contractor. Now, these are really common actually, and it used to be pretty rare. But now a lot of jobs are like this. So you're responsible for all taxes, state and local, federal, state, and local taxes. and no money is taken out of your paycheck. So you got to plan ahead to make sure you pay your taxes. So you should know whether you're an independent contractor or an employee based upon the type of tax forms you sign. So, for example, you sign a W 2 form if you are going to be doing a regular employee where they pay your taxes. If you're an independent contractor, they'll have you fill out a 1099 form. Okay, and you can look that up later just so for your information. I wanted to let you know that. Lastly, um, would be under the table employment. Um, Now, you don't have to pay taxes, but what you're doing is technically breaking the law. If you're employed, you and your employer need to pay taxes of some sort, whether it's, whatever it is, it's by law, you have to pay taxes as an employee. So you can do it this way, but if you're caught by the IRS, you could pay fines or go to jail. So I don't necessarily recommend this. So some examples of each job types. So for example, an employee, you could go Walmart, Costco, Starbucks. To apply for these jobs, you usually go into the organization and fill out an application. More often than not, it's going to be online. But it's always good to go into those locations and ask the hiring manager if they're hiring. That's a good way to start getting a job. Also, you could be an independent contractor. If you're over the age of 18, usually you can work for and you have a car, you can work for Uber or DoorDash. Well, there's other app employment opportunities as independent contractors, but just be aware that they're not going to be paying taxes and you might have to be paying taxes on the income that you receive. And when it comes under the table employment, I can't recommend it. Don't do this unless you understand and accept the risks. Okay, remember this is technically breaking the law if you're getting paid under the table. The amount of taxes you pay we're going to talk about taxes next. The amount of taxes you pay in the United States of California is usually based on your income. For young people, you only need to be concerned with 4 of the types of tax. I would say income tax, Medicare, Social Security, and sales tax are what you need to worry about. There's way more types of taxes. There's like 12 to 30 types of taxes, honestly. But those are only paid if you have you own expensive stuff or invest. And so we're not really going to talk about those type of taxes, but we'll talk about investing later. Why are you being taxed? Well, here's my long spiel about this. Taxes pay for the government in large amounts of services based upon you services. Sorry, you know. Okay. Why are you being taxed? Well, let me just read this out for you guys. I kind of wrote this out already. It's kind of a long spiel. Taxes pay for the government and large amounts of services provided to you throughout your life. It would be rare for you to not benefit from tax dollars on a day-to-day basis. Okay. For example, my paycheck is paid through tax dollars as a teacher. The roads you drive on are paid for by tax dollars, and even the internet and GPS technology were created using tax dollars. Heck, we even sent the men to the moon and back with tax dollars. Overall, it's a way for a government to collect money and redistribute it to places throughout our country, state, and cities to make things better. Here's a quote from Franklin Delano Roosevelt. And he's a president of the United States in the 1930s. And he described taxes like this: taxation according to income is the most effective instrument yet devised to obtain just contribution from those best able to bear it and to avoid placing onerous burdens upon the mass of our people. What that means is it's the best way to take money from those who have a lot of money and could give it to people who need it. Some people believe that taxation is unfair and wish to lower the tax burden on businesses and people. On the other hand, some would like to see an increase in how much the wealthy are taxed in the United States. Now, income tax is based on how much money you make in a calendar year. So how much money you make is how much you're taxed. Usually, the more money you make, the more you're taxed. You pay both federal and state income taxes. For the sake of simplicity, we will discuss only federal income tax. Each state has its own rules for income tax, so check your state laws. For example, California has the highest state income tax, and Nevada, there is no state income tax at all. Okay. So each part of your income is taxed on which is called a bracket. Okay. And these numbers are for individuals. So if you're married, you can file with your spouse for a discounted rate, but here are the first few brackets below. So if the first $9,875,000 that you make is taxed at 10%. Okay. So everybody's first $9,875 they make every year is taxed at 10%. Okay. Then any money you make from $9,875 to $40,125, that's all taxed at 12%. Okay. Then any money you make from $40,000 to $3,552 is taxed at 22%. And there's more tax brackets after that, but we don't need to talk about that. Okay. So let's calculate federal income tax for an individual making $56,124 a year, for example. Okay. We calculate each bracket separately. Okay. And then we add them all together. Okay. So for the first 10%, everybody pays 987.5%. Okay. Then for the next bracket, everyone pays $4,815. And then they only have $15,999 in this bracket. Okay, so we multiply that by 22% and we get $3,519.78. So we add it all together, and that is the tax rate. That's their taxes they're going to pay this year on that much money they earned. Okay, it's a big proportion. Okay, so usually this is done for you, so you don't have to calculate it like this. Okay, well, there's two different ways we can call this. We call it the marginal tax rate. The marginal tax rate is 22%. That's like the highest bracket you're in. But there's also the effective tax rate, which in this case would be about 16%. Most people don't pay that full 16% because of a lot of different reasons, a lot of deductions. Okay, but this is a fictional example, and the actual calculations of taxes is much more complicated. I just wanted you to get the idea of it. Okay, so there's also Medicare tax and Social Security tax. Okay, these are government programs to support elderly and retired with a minimal income and basic health care. These programs are paid for by taking a part of people's incomes, so taxing them. Okay. So if you're an employee, you pay half the taxes and your employer pays half. So that's kind of one of the benefits of being an employee and not an independent contractor. You don't have to pay all of your Medicare and Social Security taxes. If you're an independent contractor, you got to pay it all yourself. Okay, so this is kind of the drawback of being an independent contractor. So Social Security is actually 14.4% in total. Okay, so if you're an independent contractor, you have to pay all that. But if you split it with your employer, it's only 7.56%. So not too much. Okay, Social Security is pretty important for our country. A lot of people, get Social Security to help them live. Medicare, this is a little bit smaller, a lot smaller actually. It's only 2.9% in total, but you only have to pay 1.45% if you're an employee. So really small amount. And this just helps a lot of people with their healthcare costs in the United States. So here's some ideas of state taxes. Okay, sales tax. Okay, now sales tax is something you pay every time you buy something that isn't food. Okay, if it's food, you don't pay sales tax, but if it's not food, you pay sales tax on it. We have one of the highest sales taxes in the country, 8.25%. For example, it also changes depending on the city you live. So, for example, where I used to live in Oakland, sales tax was around like $9.75 because there was an extra $1.50 of different taxes that were levied by the city or in the county. So you kind of pay more depending on where you live. Okay, you'll notice some places like Montana, Oregon have no sales tax. Okay, and some places like California have lots of sales tax. So it's just an interesting thing. Depends on the area you live in. And lastly is filling out your taxes. So you got to fill out your taxes once a year. Okay, and usually if you just have one form of income, you can actually use the 1040 easy form from the IRS, and it's really easy. You can actually do your own taxes if you have a basic understanding. If you can. If you did, if you graduated high school with AQA or Algebra 1, you have enough math skills to be able to do your own taxes. Okay. There's a video right here on the slideshow where you can watch. They'll tell you how to do your taxes. But remember, this is just the federal tax form. You still have to fill out the state tax form as well.